Hello and welcome to Morningstar. I'm Emma Wall and I'm joined today by San Lee, Director of Manager Research for Morningstar Benelux. Hello. So we're here at the Morningstar Investment Conference in London, and you've just been speaking to the room full of advisors, educating advisors about how to use the new Morningstar rating. But let's leave that to one side for a second. And I wanted to look at ESG investing as a whole. It's still in its sort of new stages, ESG. Who is engaging with it at the moment? Is it institutional? Is it retail investors?
Well, thus far it's mainly institutional. We see a number of pension funds, especially in the Nordics, in the Netherlands, that for them it's really a big, serious issue. So they screen their whole portfolio based on the environmental impact, social impact, etc., etc. But we also see a shift towards retail investors, mainly through high net worth individuals initially, but also retail that are interested in it, and especially I would say millennials, so the newer generation, but also female investors. They apparently really want to express their own personal values also in their portfolio.
And this is not just something that we're seeing among millennials when it comes to investing, is it? It's a real psyche shift among that age group, that they want to see ESG in all parts of their lives, don't they?
Exactly. I mean, if you look at, for example, cars, I think our generation, we all want to drive our own car, whereas millennials, they don't mind to share a car. It's about employers they look for, also there they want to see that their employer is also, looks at the broader, society impact that they have. If you look at where they, buy their groceries, it has to be all organic. So you see a big shift in the newer generation, and I think that's very interesting that perhaps now, a lot of retail investors, especially perhaps, but older generation, don't care that much, but especially the new generation, they really want to embrace this and want to see their values back in their portfolio.
Absolutely, because if you're applying those very stringent tests to where you want to work and where you want to spend your money, it makes logical sense that when it comes to investing decisions, you won't just abandon those morals. You will want to apply those you want to invest your money with those types of companies as well.
Exactly. And it's also, if you take the a bit further even, you see, for example, impact investing, which is even more looking what's really the impact of your investments. So not so much looking at the financial return, but also at the social return. So take, for example, microfinance, where you know that as an investor you hardly get any financial return, perhaps 2-3% max, but you know that the money that you invest is really going to poor families and small entrepreneurs that are making your money work. So indeed, I think especially that generation wants to see what's happening with their money, wants to see it work, and of course they're interested as well in let's say financial return. It's not philanthropy, but they also want to see how it's has really a big impact on society.
And if retail investors want to make these ESG-driven investment decisions, how can they use the new Morningstar rating to help inform those investment decisions?
Well, I think that's the great thing of our new ratings, that we really bring it from the institutional world to the retail world. So on our websites across the globe, people can access these ratings, and if you are interested in a certain fund in a certain category, of course you can already look at the financial, the risk-adjusted returns. You can look who's the manager. You can look at our analyst ratings. There's a lot of ways to look at a fund, and this is really this additional lens that can help you if you have, for example, two funds that look very similar in terms of strategy, performance, etc., etc. If you're also interested in let's say the environmental or social impact it has, then these ratings are a great tool, because you can compare, like with our star ratings, what are the best 10%, so they get 5 globes, the worst 10% gets only 1 globe, and the rest in the middle. So it can really help you to pick the right fund, which is really much in line with your own values.
Sam, thank you very much.
Welcome.
This is Emma Wall from Morningstar. Thank you for watching.